Hello everyone, how's it going? I hope that you had an amazing day and a very profitable run with Palantir in the market, which by the way should be the case given how great the price action is right now. If you're searching about Palantir and have decided to click on my video, then chances are you're also wondering about the same question so many of us are asking ourselves right now. Should we buy more Palantir shares? And if so, how far up can it go? So as we know, over the past few years, the job market has been wobbly at best. The inflation, on the other hand, has also been eating away people's savings in countries that used to be deflationary for a very long time. So when every source of certainty is about to melt away or has already done so, we must take this opportunity to take a step back and to start working about our own financial independence. In order to secure our own financial future, we have to find the growth opportunities of tomorrow and seize the ones that can actually multiply our capital exponentially, which may increase the amount of money available for later investments. Essentially, we need to find a golden goose, and for many, Palantir is exactly one of those. Over the past few years, Palantir became so much more than just a tech stock collecting funding in exchange of market share growth promises, like so many tech stocks that are listed on a Nasdaq. It has become since then a major company, or at least a very symbolic and significant player who has the role of a canary down the coal mine. It has enough clout and mystery around it to arouse the market's curiosity and people's tendency to follow a certain trend. It is a company that people would often see equally as the risk appetite of the market, alongside, say, Tesla, Nvidia, Apple, and so on. The fact that Palantir may rise and fall with the tidal waves of risk capital is a limited but very predictable source of inspiration that may make it a very crucial stock to at least follow. In other words, you don't have to like Palantir, you don't have to buy Palantir, but it's definitely something that you have to follow closely to measure how eager the market is to get more risk on their hands. So we're going to talk about all this in this video and then some more. So if you like what you hear, then please consider to follow my channel and to check out the other videos that I also cover on this page. And hopefully that you're going to like my content and to come back for more. With that being said, let's jump into today's topic, Palantir. So, Palantir Technologies Inc., the full name of Palantir, has been trading on the Nasdaq under the symbol PLTR. It has a stable day on the market, pretty much. It reached a high of $24.58 and a low of $24.40. Over the past 5 days, the stock moved upward, increasing by more than 2% and with a ceiling of around $25. Now, nevertheless, it seems that the share price is now beyond the critical level of $20 that Palantir had so much difficulty piercing through. I remember just the price action went up and down, above and below $20 without being able to sustainably go beyond that ceiling. But that's no longer the case. And then, in fact, if anything, I would argue that right now we may have a very similar situation with what $25 is representing. So, with all that being said, in the big picture, Palantir is now trading near its 2021 level, which is definitely not that far away from its historical peak, given how low its share price went down at one point. The next target is to break through the resistance of $25, of course, and that is going to be very significant because once 25 is clear, I think that we might be looking at 30. And I believe that it's something that can be achieved within the short term. Now, when it comes to options, the important price points are $24 and $26, exactly like the kind of region we are in right now. And options give investors a different way to have exposure in a stock beyond than just buying and selling the spot, the spot equity. These options at 24 and 26 show that these are the crucial levels where the investors expect significant price movements. Well, actually, maybe not at those because it's just $2, but above and below those. They provide opportunities for traders to manage their positions, risks, and also cash flows. Because for those who are not aware, and it's not something that's that widely known, you can buy options in order to have exposure and or a hedging tool. But what you can also do is that you can sell options. Basically, you say, okay, if this option is in the money for those who have bought it, then you will have to fulfill your end of the bargain. And of course, it sounds like picking pennies on a volcano, but what this means is that unless there's extreme level of volatilities in Palantir, then this may provide a very cheap, however, a very safe kind of revenue stream by constantly selling contracts that you know would be completely out of money for their duration. So Palantir recently also had a trading volume of 46 million shares, which is significantly below its average of 109 million shares, which, is normal. This may suggest that the market has now priced in a significant amount of the existing positive news and are now actively taking profit from the existing positions. It should be expected that Palantir may start pulling back a little bit going forward, given the historically high Nasdaq level and uncertainties surrounding the economy. The trading volume is a very important factor to consider. It shows us not necessarily the speed in the absolute, but the momentum of the stock in comparison to its own past. So, in other words, in this case, we have north of 100 million as average for reference. If volume is down 50% and we're in sort of a bullish run, what does that mean? Well, it means that the bullish run may not continue for that long. That is the issue. So, of course, understanding the volume is key to any sort of trading strategy. And if the prices go up or down with high volumes, it shows very strong investor involvement and participation and support on whether this trend is going to uphold. On the flip side, the low volume could also speak volume on how the stock is being seen or how this trend has been seen. It would mean that any sort of ongoing trend are likely to finish or to come to an end. That's what it means. So Palantir has been catching our attention for a few reasons. It is perceived to be a company that can have a lot of growth, that it's a company with a seemingly successful business model, and a company that, because of all this, may have minimal dilution going forward. In other words, even if the valuation of Palantir goes up, we don't have to worry about the company selling additional shares to other shareholders in order to dilute what we have already paid for. So we can now take a look at the needs and the challenges that regular investors like you and I face in order to get a good understanding of where Palantir currently stands. Regular investors often look for stocks that can grow a lot, and Palantir is one of those. The company's positive cash flows shows that it's a financially stable company, making it pretty attractive for everyday investors who want to invest in ventures with growth potentials. Palantir's proven business model also really lines up with what we're looking for. Something that looks good on paper and works in reality. There are also challenges that investors absolutely see, and in fact, not only see, but don't feel in the market just yet. So it doesn't really, it doesn't necessarily reassure people. It just sometimes means that the market hasn't caught up with those feelings or those sentiments yet. So one of those challenges is that not everyone knows what Palantir does. Not everyone knows what it is really about. In fact, we know that it's significant. We know that a lot of people talk about this company, but do we seriously know what they do, right? My best understanding is that Palantir is a company that analyze stuff for other clients. Clients bring in data, they analyze those data, they find correlations, they find trends, they find causalities, and then they ship the results back, and then the client may do something with it. This is the bottom line. Of course, because of the size of Palantir, even if they say that, oh yeah, it's off the shelf, is plug and play, when those clients are big enough, I am pretty sure that customizable features are certainly available with like specific teams attached to those clients. So another one is that like Palantir's nature or the business they are in, analytics, often is often linked with like names that we know and that we love to hate. The intelligence community, the law and order enforcements, defense contractors, departments of defense. And in fact, it's quite ironic that nowadays we call this the Department of Defense, whereas it's pretty, sometimes I feel like these are offensively defensive, if that makes sense. So it's understandable that people are kind of iffy regarding major public companies working with those entities, because they think, like, just real quick, the reason why some people don't feel comfortable with those companies working with, let's say, the army, is because they consider that the army creates a net negative impact on the society. Anyway, this is a very long tangent, and I'm not sure that I want to get in there, but that's like the main reason why whenever a company says, okay, we do no evil, but we kind of work with the defense contractors, and then you will see like a lot of people being upset about it. That's one of the reasons. And then the other thing is that Palantir seems to really want to have the ownership of the data that they process. So one of the recent situations was that Palantir wanted to keep the data from the army, and the army people were like, you know what, not going to happen. And then in the end, that thing kind of just blew away. But it kind of shows you like the sort of contingencies that we may have if this business were to operate over a pretty long period of time, which they seem to be, given the current state of things. So now it's worth asking whether like the excitement around Palantir, and I want to say more importantly, the hype around AI will eventually fade, potentially causing heavy losses for those holding the bag in the end when everyone just left, right? So Palantir is super important in the stock market, and regular investors might find it an intriguing entity to look upon, but not sure whether they want to hold it. So Palantir's long history of development shows that it can handle challenges pretty well and pretty smoothly, which is certainly good news for investors looking for companies that can navigate volatile and difficult periods of times. However, the real challenge is to hold on to those investments in the long term, because the market can be a little bit wild. Now, something that we really have to consider is, does Palantir live on narratives? Does it rely on narratives in order to thrive? We got to remember that not that long ago, Palantir wasn't, trading around the $25 level. It was trading around $8, right? And back then, every article that I saw was just like, oh, you know what? Is the doomsday tomorrow? Is the company going to go under? Is Alex Karp the right person? Um, are we sure that we even want to invest in those companies to begin with, right? It's a bit ironic because back in 2020, 21, when EV was like the hottest thing around the block, um, everyone who pretends that they do EV are going to be able to collect money. Well, that's no longer the case now, right? And back then, I didn't see any sort of articles that were like, oh, maybe we got to be super vigilant about this trend that has been developing, um, that may make a lot of people very rich. Like, nobody was saying that. On the other hand, a lot of people were saying, oh, you know what? Is this trend a very good one once the EV bubble has bursted? So, like right now, you may feel very good about Palantir. You may feel that AI is very good, that business wise, that is. For the society, that remains to be seen. But at least business wise, whenever a company says, oh, we do AI stuff, then, their market cap increases. Is that trend going to last? And once it goes through, doesn't mean that Palantir will be back into $10, into $8, into $7. That is the kind of stuff that we really have to think about. And it takes some practice, but it should become like sort of a habit in our mind when we decide whether we want to start investing in any stock. So in Palantir in this case, but so right now the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, at this point in time, having said all this, I think it's also useful to put out a little reminder about how the market volatility may reformulate ongoing narratives for any stocks. Like we have seen it with EVs, we may also see it with AIs, that at the end of the day, those trends are ideas that people have about how the future may look like, not like predictable cash flows for investors to simply invest and enjoy dividends. If you have been around the stock market like 2 to 3 years ago, I am sure you understand that people have a fairly difficult time in the market because the risk appetite wasn't there. So we have to think about those changing market conditions and how it's going to affect your company. Now, speaking of company, I personally believe that Palantir is a decent investment for the long term. And that means even if the tide goes back and we're now left with a Palantir that went from, let's say, $30 down to $10 again, I will still say the same thing. It's a decent company to hold. It's a decent company to have in your portfolio if your risk appetite, is geared towards those sorts of positions. If not, then of course, forget we ever said that, right? But if you're looking for some controlled, measured amount of exposure in the NASDAQ, Palantir might be a decent start to slowly trickle in. Of course, right now the price is kind of high, so I'm not saying, just dump everything in now. Obviously not. Now, if the position is slowly bought in, then we're going to be able to have like a pretty decent base and a pretty decent holding that's going to hold up for the years to come.